Welcome to Tiffdoesloans Podcast, and I have my returning, one of my favorite guests. Of course, you've seen her before, Constance Woo, with owner of the Tax Renegade. So I love bringing her on, and always, around tax season, so we can get these things cleared up. We have so many questions, especially after last year. There's like coming into this year, there's going to be so many changes, so many new bills being passed that it's like so hard to keep up with.
Oh yeah, so hard.
And I'm like, I bug her all the time because we did meet over a year ago now, but
Yes.
I was like looking for a CPA, and like I just felt like I never saw any. Like it was like there was none that would ever go to the events, and I thought that was so strange. And then enter Constance with her big energy, like matched mine. So like we clicked immediately after that, and since then, I mean, we've already done so much together. So I appreciate you. And even when we got started. I had come to you with all of my
you had so many tax questions, right? You were like, oh my gosh.
Or just like reels I've been seeing.
Oh, so you were watching reels.
Yeah. Everybody told me, I've heard from multiple people that I needed an LLC. I had to have a business account with that LLC. And it was all overwhelming because I'm like, which one do I do first? Like, where do I go? And to be an S Corp. And then I told you all these things, and then you got me kind of like, okay, wait, because the S Corp, basically, I wasn't making the money to be an S Corp. Like it would have cost me more going off of that year. Yeah. So, but there might be a time for that. Yeah. But now that like I've hired you, so now you're gonna let me know. Like now I don't have to worry about that. You're going to upgrade me as I upgrade in my business, right?
Let's talk a little bit about that, right? Like you had been in a position where, I mean, let me ask you, are you going to just be going around to everybody telling them your finances?
No.
Probably not, right?
No.
And so when people find out most people are in business, they'll be like, they just love to give advice. Like I feel like people do that all the time in every field. Don't they do that in mortgages too? And loans and all kinds of stuff.
To give loan advice?
Yeah, like they're just, oh yeah, you should do this because I heard my Aunt Sally did this and that. Yeah, they do that all the time.
It's very, I mean, it comes to a point in your life, and with social media, you have to be very intentional. And I've gotten to the point in my life, like, everybody could say whatever they want to say, but if the advice is actually going through, I'm doing a thorough, like, a quick little background check of who you are and what your kind of just even personal credentials.
Yeah. And so I think at that moment in time, I think you had made a little money, but you never really shook out all the income and expenses.
Yeah, but it was still going off that year. Year, I don't think I really, that was like my first year on my own, I think, of when I met you. So this year has been different because we were going into the next year. Yeah. That's where I was like, well, now I'm closing again. Yeah. But that first year when I met you, that one we already knew was like.
Well, yeah. Well, when I met you, you were making a certain amount of income, but it's not like you're disclosing how much expenses you have or the actual net or all the details.
Oh my gosh!
So simply, some people were just.
It was all in my different apps.
Yeah, and then in your different apps, people were like, "Oh, you should do this, you should do that, you should have LLC." And then when you actually dig into the details of what someone's business goals are, what they're currently actually making, and then you shake out your regular income versus a taxable income, right? Some people don't think about that. You should be tracking your income like a regular income and losses and your profit and loss statement so you really know what you're spending in the business. But that number does not necessitate that it is your actual true taxable income. Yeah. And then it also depends on your field. So your field is
it's always fluctuating.
It's not just fluctuate and not about your fluctuating, but it's about the liability, right? You have lots of contracts in place. You work under a brokerage, right? You're under a team. And some businesses don't necessitate oh, you're an LLC, right? Someone will want to be an LLC if they have other assets in place, which, if it's okay to say, like, you don't have like a crazy bunch of houses that you have to protect between all this stuff, right? Maybe just your car that's used. Yeah. And so some people make the analysis like, well, it doesn't make sense for me to have an LLC. I'm paying the extra LLC tax in California and whatever state you're in. They have different rules.
It's like more costly.
It's more costly, but people want to sound fancy. They want to be like, oh, you should be an LLC. You should do this. Well, yeah. when you are
that's
you
like
need to walk
when you
through.
have the assets.
Yeah.
Because now I've worked with so many LLCs like real estate, which, you know, and I have clients coming to me like, when should if I just have like one home, it's like, okay, look, and I explain to them now more of that, how they're protected, especially because they're looking to get property. So that most of their LLCs are like real estate based.
So they want it to be like separate. So you think about the
you don't want them to
taxpayer.
get to your primary home.
You want to be like, you just think about like you're the main taxpayer and how things touch you. So some people will want to be an LLC for other reasons. They want that LLC name behind it so that your future customers will look at you more seriously. You might want to be a corp because of a certain reason. And then people were telling you, I remember this because you were like asking so much about, I need to be an S corp. Do I need to be an S corp? Because you're like, I only have so much time, because we met in December, right? And you're like, I only have this much time.
I was like, I haven't done anything, but I hear I'm supposed to do. I hear I'm supposed to be all these things. And I just brought her this whole list of like what all the influencers, you know, told me, and people that I was listening to. And I just brought her this whole list, like checklist of my questions. I don't think that she was even, because we did a call.
Yeah.
And then it's like, but I'm always prepared with like my notepad of questions.
Yes. Always, your notepad right there, right there.
So I already shot at her like this. La
la la la la la la. Like,
yeah. So, but that's perfect. I feel like that's a better client, like, well, than not just having no idea.
I think in this tax field, it's very easy to view things as like sexy knowledge, you know? And what I did for Tiffany here, and I think you very much publicly say you appreciate it all the time, is people misled her to think that she needed to be an S corp, but you're not going to share everything with everyone. So once we dug into all the details as a tax expert, what I looked into your future business goals, what you're currently making, what you could be making, and then I walked you through cost benefit analysis. If you do an S corp, these are the real costs. This is what you need to upkeep, and that became overwhelming for you.
Yeah,
and even
but that's not even going to be needed.
And it's not needed. It's not needed. It's like some people will be S corp, for example. I'll tell you this. So as a professional service in the state of California, and it's state driven, I have to be a professional corp no matter what. So I'm not even allowed to be an LLC. But people don't know these kind of things unless you talk through, and you can't have blanket statements as a universal tax advice. It doesn't work. And if people are giving universal tax advice online, that's why we're not going to go into a lot of these certain super, you know, sexy soundbite kind of stuff that's universal. It's really what we want to debunk today is really, how should we start approaching our taxes? What kind of questions should you be asking yourself and your tax expert to get aligned to build your goals? It's not about this person's bad, that person's bad. It's like, do these tax professionals align with you? Can they get this stuff done? Can they be with, you know what I mean? So that's what we did.
And if they could grow, because she's also like helping me kind of grow that business side too. So she's going to be giving me the knowledge, and as my business grows. She's going to, because that's what I mainly need. It's like, I am building over here, but I need somebody like, I'm not an expert in taxes, and I don't plan to be. I plan to hire somebody that is. Because I'm doing enough trying to build my own dreams and my own life. Like, I'm out here, like, literally podcasting, running, like, building my business, like, helping my clients.
You should.
So I'm doing all of these things, and I need, like, an actual tax expert, because that book is way too big. Like, I can take
and it changes. There's add-ons. There's edits.
Like, it's like my mortgage. It's like getting another mortgage license, and that's just like too much. I want to hire somebody with an actual license, and that can just know my business and upgrade me when I need to be. Or like shoot me a text, be like, hey, don't
it's time for this.
Well, don't do this anymore.
That's the big difference of, like, we talked about this last time too. I think a lot of people, when you're hearing tax advice, the first thing you should ask yourself is, what kind of circle am I in, right? There are lots of people that are very happy with a W-2 job. They don't value money in a certain way. They're going to value it because they can buy stuff. But their life goals are so different that they don't need a fancy tax expert. Like, TurboTax is perfectly fine.
No, because W-2 is easy.
And they're the way that they're analyzing, it's a lot of economics. So what I tell people in my field in accounting, there's a lot of CPAs and enrolled agents that just want a number crunch, and that's fine. Like, you don't need to diss CPAs on Instagram saying your CPA is not doing enough of this for you, because there are CPAs and enrolled agents that are not comfortable themselves to do certain things. So their target market of the people they want to help is a certain group, right? And that's fine, right? It's just like, I want to go to In-N-Out and not McDonald's, right? Yeah. And so then the next layer is, if you're an entrepreneur and you're this kind of entrepreneur and I have this kind of risk, does it make sense for me to hire another risky tax accountant or a more conservative one? And that's up to you, right? And some people are upset with the conservative accountants, but it's okay. Some of them are not going to be aggressive in what they want to do because they are signing off on the returns. So it really depends on what you're
I feel like you got to just, you know, you got to keep it pretty solid.
Yeah, you got to just ask yourself, like, what are you looking for? And there are a lot of risky taxpayers, and I don't take them on as clients. Yeah. Because I
think I may have referred you to one.
Yeah, you did. So there's this person that was there was this person that was like, oh yeah, like Tiffany introduced me to this person. We don't even know their gender. But basically they asked me like, oh, can you do this? And our first intro call, I was like, you know what? I was honest with him. I was
She was like, why'd you refer me to this person? I was like, I mean, you don't know it. You don't know.
You're not going to be openly. You're not going to openly tell people that you're risky. You know.
Yeah. Me getting to know them as a person.
Yeah, it's different than their finance.
It's going to be different. And same thing with like when people send me for the loans.
Oh yeah,
because they're like, oh, this person is XYZ, and then I'm like, that it doesn't align with anything of And then you start to, because finances, especially anything finances, is it could go so many ways. A lot of people just they don't want to talk about it. Some could be embarrassed.
Yeah, there's a lot of reasons.
Yes, like just they don't like to open that.
So window. Going back to that person, they basically, even in the first call, and it's not that it's not about like, oh, Constance doesn't want my business, she should be grateful. Because I hear some people say that. I'm like, it's not about that. It's about my entire client list. I have to protect my client list. So I sign
protect your
I sign my tax returns with my PTIN, and a PTIN is a practitioner TIN. That's a unique identifier number attached to my business and attached to my social security. It's like my social security number. So if I'm doing anything too risky in a consistent basis on tax returns, then the IRS is going to flag me.
All of your clients.
Like for example, I have this person that I know, and they actually had their tax accountant get shut down. Like this person was filing returns for a while, and I hope this is okay to share, but they're not going to find out. So sometimes, and it was innocent mistake too. So this person was being very aggressive on certain clients, not every client, certain clients. I'm making assumptions here from what I know. Basically, certain clients were kind of being like, no, why can't I just do this? Why can't I just do this? So I think that this tax accountant got lenient on a few of these clients, but consistently did it, and then didn't realize it was a high risk item for the IRS. And the IRS came back and it was like, you can't file any more returns. But then that leads to ghost preparers too.
But that also, like, okay, first of all, if you don't know what the high, like what did you just say to the IRS, like the tax?
What do you mean?
Like how it flags the IRS?
Oh yeah, like it's a high risk item.
But if you're a tax preparer and you don't know the high risk items that are like, that's not good. Like, but you should know. Yeah, you should know. Okay, first of all, you should know what the high ticket, items that like.
But the thing is, I remember you sent me a couple reels, right? And there was these Instagram influencers who were like, you can take a vacation with your family, put your family on the board, blah blah blah. And it's like, yes, people get away with it, but it's not. When it's about when it's gonna get flagged. It's about when, and then when you are aggressive and doing things on purpose, the back penalties are super severe. Yeah. So like, if, for example, if you did not qualify for your S Corp and you didn't do a good job, it suddenly the IRS is like, you know what? You never counted as an S Corp for the last 10 years. You should have been a C Corp. So now you're going to get double taxed for everything. And then back 10 years, let's say like a 2016 return, you would have reported 0 because you're supposed to be an S corp. But if you did it all wrong, and now you can't backdate nothing, and they're gonna say like, hey, but actually on paper as a C corp, you would have made 20 grand, and on top of that, the wages you took are gonna be taxed. Well, it was already taxed, right, if it was wages, but now all the extra money you took is not non-taxable distribution under an S corp. It's going to be taxed as a dividend for C corp. Yeah, so and then they add penalties on top of that. So you're like,
just,
what?
Yeah, it's really important that you're making sure that you're like less risky for the.
Yeah, but it's unfortunate in my industry. Like, it's a really big problem because unfortunately the IRS cannot crack down on everyone, only the ones that want to keep their license. So what that means is if you want to keep your P10, which is your practitioner TIN, in order to sign off on returns, or you want to keep your license, then you're the ones that care. There's a lot of people out there selling like, oh, I'm a tax advisor, I just do tax strategy, but their strategy is like, let's say I'm individual.
Are they licensed?
Some of them are and some of them are not. But here what they do. So they'll say, hey, I do tax strategy. A tax plan is $15K, but they're all copying each other. Like you hear about the coaching business right now, how everyone's teaching each other the same kind of course. No one's doing anything unique. So in my industry, because it's a very big grifter industry in social media, really, really successful tax accountants don't depend on social media to find business. My social media is just my business card. You get to hear what I think, how I think. You get to experience a little bit of what it's like to talk to me and how it would sound like if I was your actual tax accountant. So I don't have to have like so many calls all the time. But many people only rely on Instagram ads or TikTok ads in order to find tax business. But what they do is they're kind of acting like business coaches where they're selling a course or they sell you a strategy. Then tax person number 1 says, Tiffany, I have a tax strategy for you here. It's A, B, C, D, E, F, G, and they copied a certain person. They don't dig a lot into what your long-term goals are, how you want to run a business. Maybe you want to open a couple others. They don't dig in the same way as someone trained from the big firms are like me. Yeah. And there are a lot of people like me. So I'm not saying like I'm unique, but the ones that are proper, like we're hard to find. But basically they'll say, oh, this is your tax strategy. But they won't sign your return. So they're selling you a tax strategy and then
they won't sign it?
They're not going to sign your return. So they sell you a strategy. You say, oh, now I'm going to do a Roth. I'm going to do an HSA. Oh my gosh, you did the numbers for me.
So you still have to find somebody else to file it?
Yes, but then one of these individuals, because I don't want to get sued, one of these individuals is all over Reddit if you want to look. But one of these individuals, this person sells tax strategies. Oh, you only work with me. And their main strategy is Airbnbs and real estate. That's how they get them. So then what they do is they qualify people first. You have to be certain income to work with them. Then they convince you to go down the route of Airbnb or real estate. Then they say, oh, by the way, we have a different company that also can run it for you. So they're getting business from you in multiple layers. You are going to make money, but then down the line, you buy a property, you start an Airbnb, you rent or start an Airbnb with them. They do your tax strategy. They run the numbers for you so you think it's legit, which the numbers can be legit. But then they'll say, oh, yeah, and then this is our tax preparer that will file your return. But it's a completely separate business. So the person at the top never gets in trouble because they never signed the return with their P10. Do you see that? So it's like if I was super aggressive, and the problem with that too is not just about the tax return. It's like, what if you talk to this individual and you realize you're not fit to own a property? That will make you panic, right? Like there are individuals that are like, I don't want debt, right? But here I am talking about something fancy. You're going to save money. You're going to make a ROI, but maybe you're just not everyone needs to own real estate. Yeah. Right. And sometimes it's damaging.
I don't
for
know.
some.
In my world, yeah.
Yes, of course. But
yes, you do.
Yes, you do. You do.
Don't let.
Yeah, but I'm just saying, like some of them, they're not in the business to own real estate today. Yeah. They need to be prepped for it the right way. You need to look through their finances, talk to them what they're really going to spend. You're not just a monthly payment. You need to do a down payment. You also need like upgrade costs, maintenance costs, HOA, property tax, to plan it thoroughly, right? To be responsible. But these ones, it's like, what if they're not meant to do an Airbnb? Like, what if they don't have enough cash funds to rent and then rent out an Airbnb? What if they don't? Or what if they're just irresponsible and you don't want them to go down a route and lose their home and lose other stuff they have. But like people don't talk about that thoroughly. Even though you're going to still go down the same route, I hear about a lot of horror stories about this. Yeah.
That sounds like a lot. And I feel like what a lot of Instagram.
Yes.
That's why I'm like you too. I just try to stay more, I don't do, just stay, I'm just giving information.
Yeah.
I use it more like to be a resource. Than really, I
like
want
it's
them
just
to come to me
we're
with
supposed
questions.
to just be a first step.
Yeah.
Right. This is just we're going to teach you a couple
like
terminology.
I would love to get their stuff started. So I've been trying to engage more on it.
Yeah.
But it's not like trying to, sell anything, but I would like to be a resource.
Yes.
Where we can have those conversations.
But Instagram.
But I'm very quick, even at this point, 1 to 2, one conversation, I could pretty much tell you if it's going to be possible before I even see your stuff.
Yeah.
Like I've been doing this a while now, so it's to the point where I'm not pulling your credit. I'm not doing these things until I know that this thing's going to close in my mind.
Okay. What do you mean by that?
There's no need. Like, I could kind of put it together enough. I have them fill out the app where without the credit and stuff like that, but enough to where they're adding their liabilities. I could already see where it's at and what they're looking for.
Yeah.
So
are there people that you help to are there people that you redirect? Like they're either need to look for something cheaper or wait longer?
That's what I do.
Yeah.
I'll do the whole plans with them.
So that's you being responsible, right? Making sure it's not just because you want to close a sale.
And we do give so in our business we give. It's important that everybody have their max purchasing price. Okay. But for me, I don't send them out with that. And what most people, especially now, and I let them know, hey, this is your max. But us talking and with where the market is, you want to be around this because this is where your payment is. So for the right house, because as humans, if we see something that we like, we've all done it where, you know what, I don't want to spend that money. And then you really love something. And now it's I'm going to put $200 on this thing. Now you're just doing it.
Yeah.
You didn't want to
economics.
You didn't want to do $20.
Yeah.
But now you're just all in to spend $200 on this thing. So your mind, if it's the right thing and you just love it and you want it. So I always let my clients know that max. But they know that, hey, you're going to be eating noodles.
You're not going to buy a mattress. You ain't going to pay for gas.
The max, dude, you're going to be sitting on a $9,000 payment when you wanted to be at a 7. So
oh my gosh,
it's
so
they
expensive.
can make it work. Yeah. They can make it work, but just so
trade-off.
They are shopping with that knowledge of So I'm very thorough on that. But I'm
that's
more
the same
you.
concept.
Yeah.
That's the same concept
I'm
of
more
trade-offs.
like you. I don't do, but that's why I picked you because
Yay,
you're more. Yeah, that's why we're working together because you set all the expectations for me, and that's how it should be. And nowadays, because I am in a business where I have constant clients and I know how to look at their whole thing and tell them even just hearing a conversation, I'm a pretty good idea if this loan is actually going to close. I'm already running through the file in my head while you're talking about the deal breakers.
Oh yeah.
They're talking and I'm like, okay, that's good. Okay, there's a document for that. And then they'll say something. I'm like, nope, that's a deal breaker. You're done. Yeah. So we're not even going to continue type thing. But it's it gets to the point, just to be a business owner like that is, just that's why you're successful.
There's a different about skills, right? There are some people that are really great operators, right? And there are a lot of operators, unfortunately, trying to run businesses, which is great. They should, running a business as an operator is great. But when you're in certain fields, okay, let's say you're an operator and you're trying to sell a product, that makes a lot of sense because it's very A, B, C, D, E, sell, or something down the line. But when you're in the service business, when you're in finance, when you're in something that needs customization and is so personal,
it's a relationship.
It's not just a relationship. You want to look for someone, if you're trying to grow, if you get complicated in a good way, right? I want to own this business that does this and this business that does that. But people don't understand certain structures have certain rules. Like an S Corp, you can't own a bunch of S corps and only give one benefit in your S corp at the top just for you, and you have another S corp with a lot of employees and you're not offering them that benefit, because we have to do an analysis to see what's allowed or not allowed. But people don't really dig into that as more operator type thinking, because they just want to get the return done, which is fine. But if you are a certain type of business owner or want to run a certain type of life, you need to find a professional that has an economics mindset, someone that understands risk diversity or risk taking,
and as we're growing,
and understand like supply and demand and what the actual person needs. So I walk through lots of clients on different decisions. I'll give you an example. So I have one client, he owes about like 70 grand in taxes for 2025. We already know, we did everything possible for strategies. We talked through everything. I was like, do you want to contribute to a retirement plan XYZ in order to save? And he said no. And that's because he's a different taxpayer than my other taxpayer over here who did pay 60 grand, because they're just different types of taxpayers and different risk and reward, which is why my lingo is managing taxes, maximizing peace of mind, because to them, their peace of mind looks completely different. Yeah. So taxpayer number one, his goal is to actually buy a home. And he is actually more risky. Like, he actually has money in the market and he knows how to play in the market. So he's like investing, taking money out. He's doing all kinds of stuff. So he says, I would rather not pay my estimated taxes, and I know I need to pay penalties on it if I'm under, but I would rather play with my money more and then 2 times my money in the market the next 6 months and then pay for a home and a down payment and keep that cash. I'll deal with the tax later. That's the type of taxpayer he is. And so we talk through all of this so that we all feel good about the decision, right? And like, he paid a little into tax, and that's his decision. Taxpayer number 2 over here, he owes almost the same amount, and we maximized everything. And we had the discussion, do you want to put away this money into blah, 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 or like put this away into some wages or whatever it is? And he also said no, because he said, at the end of the day, the wash is going to be the same. I'd rather just directly pay the tax and not deal with the headache of all these other decisions. So we went through that. And then I have a third taxpayer that was like, I'm going to make all the effort to maximize my retirement because I have other cash flows going on here. But if you don't understand how to walk through your clients on all those decisions, you're not really helping them maximize their decisions, right? But a lot of people will say, I help you maximize your decisions. All they're really maximizing for you is all the options that they have copied from a copy paste list. You know, I actually paid for a bunch of courses in 2025 to a lot of these Instagrammers that have courses. I spent the money because I wanted to know what they're talking about. They literally have similar copy and paste PDFs.
Like all of them?
Yeah, all like 4 of them, 4 to 5 of them. And so one of the people that I signed up for their course in their platform, in their portal, it's like, oh yeah, there's my video series, and then you're gonna, if you buy my course, you're gonna get like a 50 list deductions. I'm like, those things are free online. It's not about whether you as a taxpayer should know the deductions. Yeah. You shouldn't be waiting for me to tell you. It should be a partnership, right? Where you're aware of your taxes. I know I have to do something, but I need to talk to Constance through my decisions to feel good and confident that I have a professional sign off on it, right? Or that the professional points out something you might not have noticed.
Yeah,
or
I just give them to you.
Yeah. But it's not just that. It's like you should know. You should know a little bit, right?
I know a little bit. I listen when you talk.
Yeah. So you should know. You should know her, just you. But most people should.
I'm listening to you, but it's just
like the individuals that have.
She's got it.
Yeah, I've got it. But at the end of the day, you should at least know what framework you're in. Yeah. Like, you should know about yourself.
Like, I know all my expenses. That, like, to me, that's enough. Like, I know all my expenses and everything.
Yeah.
Something that I do want to jump into is.
I was trying to finish my story. I forgot. It's okay. Yeah. I was just trying to say. So some people they should know what they're in. So I took these courses and they just copied and pasted a whole ChatGPT list. But it's about who can execute it for you. So yes, these people can teach you online, but it's not universal, because what they don't tell you is, oh, your AGI disqualifies you for this kind of Medicare, or your AGI disqualifies you from this other tax credit. Yeah. And they don't say that. So then you're thinking you could do DIY tax from their course, or like, if they don't even know the caveats.
It's just silly, because then it's like.
But they don't see it that way.
Yeah, but you can't get that from like a loan. Like, like I said, even if people fill out the application, it doesn't
Yeah.
matter. Like, I could tell you over the phone almost,
Yeah.
like, hey, if this is going to go through or not.
Well, it's the same
before
thing.
you even like put everything in, I'm already going to set you up for that. So it's like,
Yeah.
everybody is different. Every single loan scenario, every single thing is different. There's no one loan alike, just like no one's taxes is alike. So
well,
you
it's not even
have to
just
have a
that. It's the
person.
training too. So in the CPA world, and enrolled agents are just as good, right? I have an enrolled agents. I am one. So basically, in the CPA world, it's more strict than the enrolled agent. But the enrolled agent has their own rules as well. Both a CPA and an enrolled agent can sign off returns if they're trained to, right? Obviously for the CPA, because CPAs can also be auditors. They can be other things too, consultants and whatnot. But when you're in the big firms, you have a lot of strict stuff. There's a group called the PCAOB, and they oversee all the CPAs. And you can get reported. Like if you do a lot of fraudulent stuff, like someone will get your license taken away. And so when you're at the big firms, it's basically like you have to follow certain due diligence rules, compliance rules. We have like questionnaires all the time, like to fill out, like, are you related to anyone that's public and that is our client? Are you So there's a lot of high ethics and stuff there, and then the training is also very different in the big firms. Now there are really great professionals at mid-tier firms, at smaller firms, and even at local firms, but it really just depends. So what you see in public a lot nowadays are people that don't have firsthand experience in some of these environments. So they're learning things from other people thinking it's okay. So in their mind, oh yeah, you can totally take this deduction. But they never thoroughly learn the code and know, hey, if you do this, you can't do this.
Yeah.
And then if you do this, you might not be able to do that. So they never really walk through in their full career.
And it's going to be different for everybody.
Yeah, it's going to be different. So you need enough experience. And that's why people go to the big firms to get a lot of experience in a shorter time. Like
because that's pretty much the only way on the loans too.
Yeah.
You just, like I started at a retail place. So I worked on 1,000, like now I'm so chill and I just like set expectations.
Because you put in the time to
but
learn.
I closed 85 loans in that 2 years. Like it was a machine.
Yeah, but that's the only way to learn.
But I worked on thousands of files. Like I was brand new but now it's like, that's why it's easier for me just to let me hear, let me see, like I don't need you to, don't send me everything, like let me just look at this 1 second because I'm going to be able to. But that just comes with, it's important. The
well, I put 20,000 hours in 10 years.
Yeah.
And some people put in like less before they leave. And there are some individuals, they only work 3 years in public accounting and then they leave and do their own thing. So the type of like cycles you see is very different. That's why that's why to customize and to really have that eye and expertise, ChatGPT can help you with some basic questions, but it's not going to analyze the same way.
But it's not going to analyze your thing either.
Yeah,
like
there's things that it can't do.
It's not going to analyze your whole scenario unless you feed it all of your coordinates.
But even then, ChatGPT is not going to sign your return.
Exactly. So, I do want to go into the big beautiful bill.
Yeah, the One Big Beautiful Bill Act.
Beautiful bill.
Yeah, it's so long. It's OBA. Some people say OBA or OBBBA. BBBA. 3 B's.
The 3 B's.
Yeah. So what have you heard about it? Is it just like some big lingo?
I have no idea. Like, I go to you for everything. So, like, I have just, to be honest, like, I don't really pay attention to anything tax because I feel like I'm not there in my business yet to really be concerned. Like, nothing I'm doing yet is really going to, like, make me have that benefit yet, you know, per se on my taxes. So, and I know that I have you, so I haven't really dug into that, but I know the no tax on tips. No tax on tips, but no tax on overtime.
Yeah,
that's a huge one for my business too, because I have a ton of like regular people out there, nurses, police officers. These people construction workers work overtime all the time, and now it is going to help them have more buying power.
Yes and no, right? I mean, a lot of people, when they hear this, it's great that they passed it, but it's not so much so that it's going to benefit 100% of the people that it applies to, right? It's really to incentivize it's to incentivize businesses to give people their tips, right? Or to pay, make sure that their workers get their tips or overtime. But then there's always going to be thresholds and cutoffs and phase outs. So those words is like thresholds, phase out, thresholds are like basically the boundary of what's allowed. So there are cutoffs for wage, overtime for a certain amount of hours. So you're still going to get taxed on your base, but then your overtime part, only a portion of that is non-deductible. So it's not like it's so crazy more. So some people I've heard even that do overtime kind of work, like nurses and stuff, they're like, it's not worth it to just work another 40 hours in order to get only no tax. Because
it's not on
it's
all
like,
of them?
like, let's say you don't have to get taxed on 5K of it. It's only and if you're at a 30% tax rate, even if you're at 24 tax rate, you're only saving 24
So it's
cents.
not on all of their overtime, each business?
No.
Well, because the workaround there that we thought, like once we heard that, we're like, now businesses just aren't going to give you overtime. They're gonna like hire a new employee type thing.
Yeah, it just depends how people look at
seems,
it. Yeah. So right now the IRS is still shaking out stuff. Like for example, the no tax on tips, right? That's also the same concept. Like there's always going to be similarity of like thought and concept to certain rules,
but
right?
most people don't even. The thing about tax on tips is that like,
but you have to report it. So for example,
I mean, do you have to report it?
You don't. But if you want to,
okay, but I'm saying
for your qualify for your house.
Okay, but if you want to, but nobody that's like making tips. I mean, we just can't.
Well,
even if they put them on there, I just can't.
But you have to think about a legitimate business that the owners are collecting all the information on tips through apps.
I was a server for 10 years. Like,
I know, but
you
think about
barely.
It this way.
Nobody really claims all of their tips.
It's not just that. Okay, so let's just only use Toast or whatever, Clover, right? Their tips are coming through a digital platform that's going to report it. That's what I'm saying. So
Toast or Clover? What is that?
Those are all like those swiping apps when you go to the restaurant. So not all tips are cash anymore, right? A lot of people put tips on their credit card when you're signing off, right? So those tips that are getting reported.
Oh, yeah.
Yeah, I'm talking about those. Yeah.
Reported.
So you have to make sure it's reported on your W-2. So I'll give you an example. So my whole point here is IRS, because the One Big Beautiful Bill was passed in 2025 in the middle of the year on July 4th, not every rule was for 2025. Like they went backwards to say if the whole year, the January 1st, if your child was born, you get qualified for the Trump account. Bonus depreciation, they're like, okay, even though we signed it in July, we're letting you go back to whatever you bought in January and throughout the year to be able to be used, right?
Good.
So there are certain things, but with the wages and the tips issue, there's certain rules that get passed in certain years. They don't have enough time to catch up with the forms. They already released the forms in the beginning of the year. This is what it's going to look like. So every payroll company like Gusto and all these other companies that have been like giving a lot of training and updates to professionals like me, like I'm opted in to all their newsletters and for many companies, so I can hear like what the different payroll companies are doing. So I'm like, even if I'm not online, I'm like chronically listening to classes and stuff from my profession. And so they told us like, hey, not everyone is going to have their stuff reported. So you might have like your W-2 income on the box 1 might include tips for 2025. So you have to carve it out in order for you to want it not to be included in your tax return. So it's like you have to actually document it yourself because they didn't have enough time. But going into 2026, all the forms, they'll have that updated and adjusted. So, and this is about wages and tips, but for everything else, like there's some things that when something is passed, it takes time for them to update forms, update rules, come out with their response. Like IRS, I remember one year in the first TCJA, when Donald Trump was the president the first time, he passed something, and in IRS's rules, they messed up. Like they messed up the instructions for the C Corp. So the C Corps got an extra month to file because they messed up their own instructions. Oh my god! So yeah, but it was benefit. All of us tax professionals, like yay, we get to spend more time doing this and not have to rush this, But like anytime something is passed, it's so much at the same time. They need to prioritize what makes the most sense. And there's like notices or like they call them there's like memorandums about laws. So they'll be like, this is our website. This is what the law actually says, the actual wording from Congress or what they pass. And then this is our interpretation, or this is how IRS is going to execute it. So sometimes between that time, it takes some time. So with the wages and overtime, everyone was like, oh yeah, we're not gonna da. But once they started publishing articles about it, they're like, oh yeah, it's only this piece of it, or this is how you need to report it, or in order to have the benefit.
It's like going to be a whole extra step. It's almost might be a hassle if you're not even making that much.
Yeah. So some people,
if it's small,
it's beneficial. Like my client.
If you lived off that, it would probably be beneficial.
Yeah, so my client, we already thought about this ahead of time. So my client is in a business that does get tips, right? And we made sure that, and this person converted to an S Corp last year. We did all the S Corp stuff. She's going to be counted as an S Corp all year. And on the payroll we ran, I made sure that we put tips in there because Gusto actually was going to print it right, you know?
Yeah.
And so then now I decreased her tax, making sure when we ran the payroll that like it was included. And so it's like those kind of people, your tax professional thinking ahead for you, right?
That's nice.
And some things are trade-offs. Like it's not worth the time right now to figure out because at the end of the day, the numbers are going to be the same.
Yeah.
Let's figure out what's the most efficient for your business and what we need to do now. Mm-hmm. Yeah. So the One Big Beautiful Bill, there's so many things. We would take like 5 hours. Yeah. I sat in 2 8-hour classes for tax. My book was this big.
What is something in it where I know a lot of people were panicking? Like, what's something that they panicked about?
R&D credit.
Okay, what does that mean?
R&D credit has more rules now. So
what is R&D?
So credit? Research and development. Okay. So a lot of before. Okay, so how do I say this? Okay, so at some point between the administrations for Trump and Biden, there was a phase out of what you could do for R&D credit. It was a different kind of treatment. So either you treat it as red or blue. Let's just make it sound simple, right? So the blue treatment was no longer allowed, right? Or like it phased out. And so with R&D credit, in the previous era was qualified by certain things like, oh, if you do research, XYZ, lab costs, it counts towards research and development. But the IRS made it more strict. So now you can still apply it blue or red. It's just method of calculation. But now they have more rules. Like just because you run labs to get a result does not mean you qualify for research and development credit. So a lot of these doctors that were claiming a lot of aggressive credits, and there were a lot of, unfortunately, R&D credit firms that were targeting doctors and trying to upsell them, doing crazy studies, and I think some of them are going to get audited, to be honest. But yeah, so R&D credit was one. A lot of people were panicking about the ERC credit, the employee retention credit. There's a lot of things that were phased out, and including the donations. So now there's a floor. There's a 0.5% floor, and then there's a ceiling. So it prohibits kind of from like, oh, let me just donate $1 million to some shady organization and take this itemized deduction for a donation. But the other benefit is even if you are not doing itemized, you can still donate $1,000 as a standard deduction person, and you can count that on your return now. Okay. So there's like trade-offs everywhere. A lot of people. One thing that the One Big Beautiful did do was solidify some of the brackets. So when Trump came in for the Tax Cuts and Jobs Act, he actually helped a lot of the brackets out, like shifting the brackets up so you'd have to make more income to jump the percentage up, and other deductions like bonus deductions. So there are benefits that did happen, but some people panicked because they were just like, oh, are we going to do this? Are we not going to do this? So when it got passed, at least you can do more long-term planning again.
I'm still praying that he gets rid of the income tax altogether.
Oh, yeah. The unfortunate thing is they were talking about self-employment tax being wiped out, but
it didn't make it?
Yeah, it didn't make it.
Yeah, because it's... Now it's pretty, with everything that's been going on, it's like, yeah, people don't even want to pay their taxes.
Yeah, this is making me thirsty. Yeah. Sorry. It's a really big bottle.
Yeah. And I feel like, yeah, it's been tough.
Yeah.
Just with everything that's been going on in the world. And it's like now it's tax season and everyone's like, where is all this money going?
Yeah. Yeah. Well, the good thing
the
good thing is standard deduction did increase, and then the SALT cap increased. So,
so
one strategy people forget to do is, although the SALT cap is increased, let's say if it's like 40K threshold for some of the filers, but you only have like 15K. So it used to be 10K cutoff, right? But if you had 15K of property tax and other things added together, and then you want to be really, if you're really, really not aggressive about your payroll. Like some people are S corps. It works for S corp people. If you're an S corp and you're like, oh, I don't want to pay myself so much wages, I want to take it all as distribution. That's kind of a flag too. But if they end up paying themselves just a little more enough and then withhold enough California tax, if you're in California or any state, then your SALT goes up and you paid for your tax. So it's like a double benefit, just like PTE. Good. So it's like there's good stuff, but you have to strategize it right and make sure it gets executed.
Well, you need somebody like you that's taken like 10-hour courses on it. Yeah, because
more like hundreds of hours last year. I was like, my brain is dying. That's why I was like barely online. I was like taking so many courses on the different topics.
But that's good. That's what you know.
Well, it's not courses, it's continuing education for my profession.
And I'm like that. I have it in mind. So
yeah, exactly. So
I
you
have
understand.
to do it every year.
Yeah, but I take extra courses.
I use ChatGPT this year though.
No, but I take them because the professionals I teach are from the big firms. They're like
still
top.
Do all the videos.
Yeah. But nowadays you can't. Back when I was first starting in accounting, a lot of people can survive just playing and then just cooking next on video trainings for my profession. But now you can't. You actually have to pay attention in the CPEs.
I know that
because it's so complicated. Like all the stuff when I first started,
I've done that too, where I just try to skip through, but those little quizzes at the end are like impossible and you can't get through. I've had to go back and actually pay attention because there's no way around it.
Yeah, so I started learning a little bit of tax in high school, and that was around the time it was the Bush and Obama administration transition, right? So I started learning a little bit because I was intrigued. I'm like a little entrepreneur, like high schooler, I'm like side hustling, like tutoring and all that stuff. So I'm like, I want to learn these things, And so it's changed so much, like even from Obama to, whoever, and then it changed back and forth again.
Do you think we're headed in the right direction of changes?
Yeah, I would say.
Economically,
it sounds like more than not, because when the Tax Cuts and Jobs Act came out, it was great. When the QBI, so one thing One Big Beautiful did too was help make QBI more permanent.
Okay.
And so QBI was great because if you're a pass-through, if you're Schedule C and you're making income, just by being a small business, you got the extra 20% deduction. Okay. So if I'm making 50 grand, I get the extra 20% deduction, but it's a little bit of a complicated calculation. It's not a straight 20%. You have to do all these like hoops, in your calculation.
Have to do all that.
I have to know her.
Me. We all don't have to do those hoops.
So whoever's calculating your tax return, it has to, and even doing our tax planning, goes through all those hoops to figure it out. So that was cool. Tax cut. But what I saw was a lot of businesses called us and called my managers and said, hey, like now that I'm getting like some of these people are getting 30K deductions, right? They're like, now I got 30K deductions, I can hire an assistant. I can buy that equipment.
Yeah.
I can buy that equipment. So it really on the tax,
it really helped them
tax end,
like to leverage. If they were using it, they could use that. If it was being done
instead of paying tax
correctly, if you were doing it correctly, see, and that's why people like you are so important, because they caught that, and because they did that, it gave them leverage to expand their business in some way.
Yeah, or like make their life
easier. And
easier.
that's what's like so important. I feel like the difference than just like if you're going to be a business, I'm growing. You're going to be having those strategies for me.
Yeah.
Which
So
I think is pretty important.
The best thing. So that's why I do things the way I do things, right? So not every tax professional is the same, but when I was figuring out leaving the big firms, I was like, okay, I'm a minority woman, and I hated seeing a lot of minority businesses or first gen business owners getting taken advantage of at the big firms. And I'm not saying everyone does it, but it happens, right? They're like, oh, we upsold or whatever, or the culture in-house is just not great, right? And so I paid my dues, sucked up my experience, cried a lot at partners that yelled at me. And I was like, what kind of business do I want to run? And I love my dad came from the American dream. He escaped Vietnam, right? And he came to this country. He's not a business owner, but there's a lot of aspects of the American dream that people can relate to. One is like being able to own your own business and like try to build your own life. And people, like the non-monetary part of it is being proud of that, right? And so something, maybe I'm just because I'm a little bit more extroverted than some tax people, I enjoy the part, just a little bit extroverted than some people, is I really enjoy I can calculate things very fast, and I can like finish tax fairly quickly or analyze, or the complication and the overwhelm does not scare me. The part I really enjoy is the business side of things, right? Where my client is like, I'm so small business, I am making money, but I cannot prioritize multiple coaches or multiple employees. So what is a necessity? Tax, right? So in your business, the first few things you're thinking about is, for your product, I need to buy the product and sell the product. If I need to do that. I need to buy business insurance. And one of the things people don't prioritize enough is the right tax professional, right? If you're trying to grow. So recently, what is her name? Bree or something from Selling Sunset. She had said on another podcast, she was like, someone asked her, what's the most important thing about business that you've learned? Because they feel like she's really successful because she knows how to do things behind the scenes. And she's like, spend the money on the right tax advisor or the right business team. And so not everyone can afford multiple people. So the way I wanted to
just the one
build my business is, if you have to hire a tax person anyway, and these are your goals, I'm so happy to be there and fill two shoes while you're building. And then that way I can be your first chair. And when you're ready, we'll bring in a financial advisor. When you're ready and you buy more things, we'll bring in an estate lawyer to do all your planning. So a lot of my clients are in different phases. I have 2 clients, they're ready to do more retirement planning or pivoting and doing some legacy planning because they're trying to pass on their business to their kids. I have another client, they are like, we never did our estate the right way. We need to revisit that, right? And so we're doing a lot of planning here, but if you can't do business cannot be done alone. I have business partners that don't own businesses, but we partner together lots of times, and we do think tanks. We're like, hey, what are you seeing in your industry? Our industries cross each other. So what are you seeing in your industry? I'm seeing this, I'm seeing that. And then we're like, there's confidentiality there, so we trust each other sharing stuff. So we're like, this is what I'm facing, this is what I'm facing. So every business needs that kind of person, I'm my own tax person, so that's easy, but even I talk to other tax professionals about what they're thinking too. So if you're
100%,
you need someone. And then if you build, you should have more than just me.
Because I'm on my own, but we still have like a team that
you need a business manager. You might need a CFO one day if you get too big, right? You can't do so much alone. You can only do so much alone.
I hope I get too big to where.
Oh yeah, you are, girl. Get it.
What about the like independent contractors? So like solopreneurs with these tax changes, what are the ones that we have to look out for mainly? Like this year?
It's all pretty much the same things.
Okay.
I think a lot of it's like people are making it very like, let me tell you what the big beautiful bill is, and so I can sell to you.
But it seems like a lot of that doesn't.
A lot of it's the similar. It's just now they're solidified the rules. So like the same thing with the salt deduction, right? Is if you're a solopreneur and you pay yourself, you can't pay yourself wages as a Schedule C. Everything's going to get taxed, self-employment. But if you are an S corp, right? Because those are solopreneurs can be S corps if they're by themselves, right? And so if you're a solopreneur S corp and you pay yourself wages, that increases your SALT cap on your personal return. So there's a lot of just dancing around and solidifying the QBI for solopreneurs on Schedule C and LLC and S corp. They can all use that. Continue to use that. PTE, pass-through entity election, is really great for people that are LLCs and that are S corps. It's just like paying your California or your state tax early and then having it benefit federal taxable income to lower, and then it's a credit. It's like a dollar for dollar credit for your state.
I like credit.
Yeah, but the biggest
especially
thing,
in California. Yeah.
Well,
if I get any type of credit from California, or one time I've gotten like. Even if they give me like $150 back on my state taxes, and then, I feel like, all right.
Well, so for both businesses and individuals, individuals doing Schedule C, like the biggest thing that people don't understand is bonus depreciation sounded really good, and it is good, but there are rules again. Yeah. So there's no such thing as free lunch.
If it sounds too good, it just is.
Fake news.
If it makes you super happy and everything sounds great around it, it's not real.
Yeah, only Jesus makes us happy. but yeah.
It's odds are that's very true.
Yeah, right. So bonus depreciation is great, but then there's only certain categories that can take 100%. So it's not everything you buy is 100% bonus depreciation right away. So the treatment of assets is if I buy $5,000 equipment, you can only depreciate so much of it every year, and the Tax Cuts and Jobs Act made it 100%. So if I bought a $5,000 equipment and it qualifies, it has to be qualified property. So that qualified property, I'm allowed to take the $5,000 as a deduction right away. Before then, you have this whole rule, is it like a 5-year life, 7-year life, whatever year life, and then you have to divide it by that. You can only take a portion. And then if there's business use percent, it gets all complicated. But yeah, so if those are qualified, then good. And so people were panicking about One Big Beautiful Bill before it was passed, because they were like, oh, it was phasing out. It was like 100%, 80%, 60%, and then there was supposed to be no more bonus. But because Trump came back and he's really pro bonus depreciation, they brought it back, and it's going to last a lot longer. But again, you can't depreciate land. You can't depreciate certain types of real estate. Like your the 27.5-year property versus 39-year property. There are also rules. There's always it's custom. Everything's customized.
I mean, I feel like we're, it's not even surprising.
Yeah.
At this point, that's why. And with all these new changes, I just, unless you're W-2, because I did all mine by myself. I mean, even I could do them on one of those little, like you could do them online.
Yeah.
It's, I had 1, maybe 2 W-2s, very simple. At that time I didn't have assets, but now I'm building and, I'm going to keep buying.
Yeah.
And I think it's super important that you have somebody that, especially with all these changes, same thing, like people to employ me as a loan officer, like, I am setting all of your expectations. I'm following the market. I'm doing these things for you, so you don't have to do them.
Yeah.
Because you can go on and like put your stuff in and get qualified, but that thing is nowhere near what I'm gonna do for you. Because like you said before, these things pop up, and you might not be able to do that with this.
Yeah, but you can do this with that, right?
So it's like, it's just worth it, taking that other step and having the conversation, getting the advice, and hiring somebody like
But
you.
Unfortunately, people have come across really bad tax accountants. And there's 2 categories of bad, right? One category of bad is not on purpose. It's that tax person was not providing that service. And you should have asked, right? Like you could ask, like, hey, tax accountant, do you do this? And some of them will be honest, like, no, I don't do that kind of planning.
Yeah.
I'm happy to partner with someone. And I actually do strategy for lots of people that want to keep their tax accountant because they do love their tax accountant, but they want to partner with someone in a certain expertise. I'll give you an example. I do international tax. So I have international tax experience where at one of the firms, I built an entire practice with a tax attorney. We did all the education for the other accountants. We built the templates, we built the calculations, we did a lot of the consulting. And so, this tax season, I'm going to actually work on a lot of Australian tax returns, which is fun. Awesome. I love it. The Australians are fun.
I know, I love Australia.
But international tax practice. So some of my peers in the industry, we actually collaborate a lot. So I have a tax friend. They run their own tax practice, but whenever they need to tap into me, they contact me, be like, hey, my client, I'm not going to poach their client. I don't need to. And I love collaboration. So I'll be like, oh, just send me their forms. I'll review. I'll investigate what needs. And I'll review what you already did to see how it dances with the domestic return, which is the U.S. return, and see if there's any credits we can take vice versa on both sides, right? Like, oh, you paid foreign tax credit here, so now we can take an extra credit here, like, things like that. And so we collab a lot. So you need to ask your tax person, one of the first category of bad is, it's simply your tax accountant does not provide that service, and it's okay. You've moved on from them, but you should ask, like, respectfully, right? Some clients are like, "Oh, I'm not happy with you because I was like, you didn't even ask, and I told you, and you bought a small package. You didn't pay for the premium package with me, so obviously it's not fair to my other clients." So there are accountants that are great and they do provide. Just ask them, and some of them don't, and that's okay. The second category of bad is, they just really want you as a client and they kind of just don't want to lose you. So they don't really explain it. You might have outgrown them. So a lot of people, unfortunately, just don't meet a lot of tax account, because a lot of people with my experience, they want to stay at the big 4 or they want to stay at the big 50, the top 50 firms and keep moving up there. So they're not like my generation. I don't think there are a lot of people coming out and trying to start their own firms because it's so much work. It's a headache. Like I've been yelled at. Like last year you guys know who you are. Y'all yelled at me, because you're stressed. So I'm like, I understand. So I'm like, okay, yell at me. You're just panicked. It's not me. It's you. You're just stressed about your own money. Like, you should not have bought in that car.
That's true. Yeah, you have to definitely have thick skin when you're helping people with their finances.
Because they panic. I see the most vulnerable side of people, right? People are like, I'm worried about my spouse. They spend money. Like I'm like a therapist sometimes.
Yeah. No, all of it. Yeah, we have many hats.
Yeah,
I am a therapist of like, the amount of different hats that are worn when you are,
you touch money. If you touch money, it's all kinds of.
It's also like I wouldn't have it any other way. Like I mean, I do leave that available for them. Like, not that like, hey, if you're, but I'd rather you come to me if you're having second thoughts or doubts. Come to me than somebody else, so we could work through those fears or.
Because a lot of times, and that's why the way I do things is I do a lot of package style stuff so that you don't have to worry about asking me a question. Because my industry on the other end, so the low end is people don't provide that service, so you just outgrew them. On the other end, they're like sharky lawyers at the top firms. They just want to bill you for every minute. I'm spending a minute of my time. It's like $500 per every hour.
Okay, we don't do that.
So, but then what that creates is you being fearful as a taxpayer of not sharing everything you should share. And some people are like, oh, I don't want to waste your time. I'm like, tell me everything you're thinking. Because while you're telling me, I might hear something that actually could be very valuable for me to use for you. I can help you out.
And I love all that. Definitely to just as much, I'm always trying to be available, get as much information. And then just to, final advice here, what would your final advice be, for this new year?
Just get it together. I'm just
kidding. Get prepared.
Get prepared. No, but I don't know. My biggest gripe right now is I get so upset at tax influencers. No offense, but like one thing we didn't talk about is, so for example, there's a lot of AGI thresholds, right? Adjusted gross income thresholds. And a lot of these people online, they say blanket statements, and then in another video, they're like, it's okay, I just got them in the door. But my biggest thing is, do your research, and I'll be coming out with more content about this because I just want the community to know there's actually rules with IRS that you can't advertise guaranteed numbers. You can't make guaranteed claims. You can't say, I will save you 10 grand or your money back. Your IRS actually, go on, like literally Google right now, IRS, like it's
they
on
all have compliance.
It's on their website. As a professional, if you want to be ethical, I can't advertise. I will never advertise. I can save you because you don't know. I can't do rates. You can't do rates.
There's a lot of things we cannot say.
Yeah, but people don't know that, so that's why I want to say it. And then they're not allowed to do contingent fees anymore unless it's a IRS dispute court case. So like I can't say, hey, for your 2025 tax return, Tiffany, if I save you 20 grand, you give me 30%. Right? And then what if Tiffany only owed $1,000? Yeah. What if you only owed $1,000 originally, and then I wanted a contingent fee from you? So that's what contingent. It's contingent on the result, right? Oh yeah. So if I charge you contingent fee,
who's doing that though?
People used to do. They do that all the time. They're like, oh yeah, if we save you 50 grand, I'll collect a percent. But then that creates fraud on the tax preparer's side. I'll be like, for example, if you were only going to owe $1,000 if I was being ethical, right? And then I say like, oh, but if you save, if I save you over 10K, or if I save you over 50K, like you'll give me and I knew you had the cash or something. I can easily file a fake, draft a fake return as if you were gonna owe 50 grand, and you're like panicking. I was like, no, let me just do some magic, and then I bring it down to 1,000. Now you have to owe me freaking 20% on 50K. That's ridiculous. Right?
That's what people would do. Yeah, that's weird.
Yeah, so IRS does not allow. There. Yeah, so IRS does not allow that. So I would say, my biggest advice this year is don't be overly cautious, but just be an adult. Just be an adult. Use your brain and what sounds proper or not proper. And of course, when you're shopping around for people that you want to work with, really direct it, not just because you want deduction. Don't think about the deductions. Think about your values, your business goals, where you're trying to grow, how you're trying to grow, and then surround yourself with a team of people that will bring that value and elevate you. Yeah, that's my biggest thing is I get so annoyed of them. But I'm not gonna do review of videos either. I know there's a girl that does review of videos. I'm not gonna say her name. She's amazing, but all she does is review videos, which is great. So I don't need to spend that time on it. She's already doing it. It's fine.
And I love that. And it is so important right now, just have that intention. I tell my clients to There's so much information out there
Yeah.
that, you know, look, and we all know by now, if it sounds too good to be true, most likely it is. Get the fine print, ask questions, go to somebody, you know.
And one of the biggest things I get annoyed of is ghost preparers.
Yeah.
Like remember earlier when I was talking about the P10s, I actually sign my returns, but there'll be people that say, hey, Tiffany, I charge you $1,000 to do XYZ forms. Okay, cool. I send it to you. Then when you sign it back, I don't submit it with my P10. So then it looks like you self-prepared it.
Oh, yeah. That's weird.
Yeah. So people do that so that they don't get in trouble. And then people that are practicing that, that you were saying, okay, they don't get in trouble. So even let's say a tax lawyer commits fraud or whatever, and then they get their license revoked. There's no, IRS cannot penalize them for just being online and giving advice. That's unfortunate. That's the unfortunate part. So that's why that's so much more important to listen to advice online more carefully.
Yeah.
Take it with a grain of salt.
Definitely get like a second opinion. Absolutely. I know. Hit us up. I'll have all Constance information below.
Yay.
And then, feel free to reach out to us. If you love this, feel free to like, comment, and subscribe. And we'll see you soon.
We'll see you soon. Thank you.